Welcome, everybody, to today's session. It's a quick masterclass to look at where you might have got some hidden profit in your businesses already. So it's not going to be hugely strategic with complex strategies or anything like that. It's just some short, sharp, actionable tactics that you can implement from today. We use these tactics with our clients all the time, and we find that a lot of them do find quite a bit of money that is already hidden in plain sight, as we say, within their businesses. So most people, when you say they want to make more profit or they want to make more money, they instantly think that they want to make more sales. But actually, you don't need to do that because I can guarantee you pretty much 100% that you are going to have things in your business that you could do differently or start to do that will actually deliver some element of increase to your bottom line and your profitability. We've got clients, this screen explains that we've got clients that have saved somewhere in the region of £1,000 to £5,000 a year by following these tactics or a combination of them. So hopefully you will find something that you could take away with you today from this. Right, so strategy number one. How often do you audit your regular payments, your subscriptions, and your memberships? I will challenge you. We did this at our recent Profit Accelerator, and I'll challenge you to look at your bank statements for the last 3 to 6 months and scrutinize every single payment, regular payment that you make, not just a quick glance, but actually look at where the money's going. So things like direct debits, software subscriptions, membership fees, have a look at those because what we find is that quite often you might have signed up for something when it was free and it's auto renewed and you haven't realized it and you're not actually using that package or piece of software anymore. We'll find that you've got subscriptions that you're no longer using. So, for instance, you might have taken on board another tool that's on a free period and it's better than the one that you were using, but you've forgotten to cancel that subscription. That quite often happens. You can also have duplication of services. So, for instance, in our own world, we were using Calendly, but we've got access to Microsoft Bookings through Microsoft 365. So why were we paying £25 a month for Calendly? A lady that was on the course with us last week, £44 a month she found for something that had auto renewed that she wasn't actually using because she didn't like it after the free trial. So I would absolutely challenge you to look at those bank statements and see what it is that perhaps is outdated that you're not using. Maybe it's got more users on the package than you need. You might find that there is definitely some savings to be made there. Typically, £300 to £800 we've found with our clients when they go and actually look at their bank statements. And I wouldn't do it just once. I would do it a couple of times a year and just make sure because these things come round and round again. And actually, one lady even told us that she'd done it on her personal account as well and saved even more that way because she found she'd got similar situations with personal subscriptions and things. So that's definitely an easy one and will drop straight to your bottom line if you can find savings that way. Strategy number two is similar, but you need to review your suppliers and utilities. So, depending on how you run your business, a lot of you may be working from home, but that doesn't mean that you can't review some of these costs. So, your internet and your phone, how often do you challenge those increases? How often do you argue with the suppliers and see if you can get that down? A quick conversation could save you quite a bit of money. Business insurance is another one. I would recommend that you get three providers to quote for you at renewal period. And if you start playing them off against each other, you can quite often find that you can save money on the business insurance too. Um, if you are working in premises, which some of our clients do, then make sure you are constantly checking things like your gas, electricity, and your utility bills, because again, there are savings to be made that will go straight to the bottom line if you regularly check in those rather than just allowing them to auto renew at the end of each contract period. And with your cost of sales and materials, whatever you're buying for your business, do review those costs as well periodically and make sure you're getting the best price. Have a look and see whether you can actually buy things in bulk, so get volume discounts, whether you can make payments up front that will give you a small discount, whether you can actually, take advantage of their offers. You might not need something now, but maybe you could afford to put something away for the future materials that you're buying. because all of those things can add up. And I would definitely set yourself some annual reminders a couple of months before things are due to renew. So things like your insurance and utilities, and just have a look at them. Again, we've got clients that have, it doesn't sound like a lot, but 20, £25 a month here and there, it soon all adds up. And if you're doing that alongside cancelling those subscriptions that we've just talked about, you can find yourself with, quite a bit of saving coming through. Now, moving away from savings and actually looking at how you can earn money, um, ideally, you should be having money sitting in your bank account. We want you to be saving your money for your taxes, and we want you to be having some reserves there to make sure that if there is a rainy day, you've got some cash available. But you'd be surprised how many clients leave the cash sitting there and it's not earning anything for them. It's an asset, but it's giving you no return because it's sitting there and it's not earning any interest. So I would encourage you to look at the deposit accounts that are available with various banks and to consider whether or not you can move some of that money into a separate deposit account that is actually going to earn you interest. Um, you don't have to tie your money up for months on end. There are some fairly good savings accounts where you can still get access within 24, 48 hours if you need. The interest rates might be slightly lower than those than if you could tie it up for longer, but we're still seeing accounts around 3 to 5%. So, for instance, at the moment, we're in a position where we've saved our tax money, we save our VAT regularly, and we have some reserve money sitting around. We're currently kind of gaining 100, £120 a month just in bank interest, and we're doing nothing other than just leaving the money sat there ready to pay the tax man. We've got clients that have got sort of about £5,000 sitting there, and that's earning them 4%. So that's £200 a year. It's money for nothing, basically. If you leave the money in your current account, then it's not earning you anything. So I would strongly advise that you look at that as well. In terms of how much you tie up, it really depends on your business. You want to have access to at least 1 or 2 months overheads very readily in case you have a rainy day, like I said. If you can afford, if you've got more than that in terms of surplus, ideally we like to see people have 3 to 6 months overhead saved, but you could put half of that into a deposit account and earn really good interest on it. And you could maybe leave the other half in the current account if you're nervous about tying it all up. But I would definitely recommend that you look at how you can make your cash work for you, because it will, again, come straight onto your bottom line and increase your profits. Strategy number 4 is also looking at banks, but from the other angle, which is the cost. So a lot of business owners will open bank accounts when they start out and there'll be free banking. Be careful, because sometimes that free banking after a period of time turns into paid for banking. So again, I'd be reviewing your bank statements to make sure that you're not paying excessive bank charges or any bank charges at all if you're not expecting to. If you are in a position that you're paying bank charges, or that you are in an overdraft position, or that you've taken out loans and things like that, then I would definitely be reviewing those on a regular basis to see whether you can get better deals. A lot of the challenger banks like Starling, Tide, those kind of places, they are pretty good at offering low fees in terms of banking. They have very simple bank accounts, but for a simple, straightforward business, they're absolutely fine. And they will save you money than some of the bigger high street banks if you are paying bank fees. And again, they add up. If you're using if you've got something like Stripe or Zettle or Square, if you're taking payments like that, I would also have a really close look at the difference in charges, because even 0.5% can make a big difference to what you're paying out in charges. If you process £10,000 in card payments in a year, then just reducing that charge by 0.5% can save you £50. And again, not a lot, but with all these things, they keep adding up. And what we find with a lot of business owners is you set something up, you get a process in place, it works, and then you don't look and you don't go back and check that actually there's not a better deal out there. So just set yourself some reminders, as I say, and make sure you're looking at these things quite regularly. Now, another way business owners fund things is via credit cards. And we certainly do this. We use a credit card that's called Capital on Tap. We use it to pay for all of our normal overheads that we would pay for anyway. So our subscriptions, our rent, our overheads, our insurance. But the thing is, we get 1% cash back on everything we spend. Now, I'm not advocating that you have credit cards that have balances growing on them that aren't paid off. And, you want to be in a position that you clear that monthly balance. But again, for doing nothing more than just paying our standard bills, we are earning 1% cash back every single month on that credit card. And again, that adds up, £1,000 a month at 1% cash back, that's £120 a year. £2,000 a month at 1.5% cash back, that's £360 a year we're earning. And with these credit cards, the cash back can change depending on how much you're spending. So, it's an option, but I guess you've got to be good with money and you've got to clear that balance every month. You don't want to be getting yourself into a situation where you're incurring interest because immediately you're going to undo any of the good that we've done with all these other savings. Um, Strategy number 6 is around tightening up your debt collection. So for every day that an invoice sits unpaid, it's quietly costing you some money. You lose the chance to use that cash in your business. You might end up paying interest on your own bills if you've had to borrow to pay them. It adds stress. So there's various, reasons why. Obviously, for your cash flow perspective, you want that money to come in, but it could also be costing you money. So we would recommend that you always review your credit control process and make sure that that is tight. You want to make sure that you track your money. You want to be invoicing as soon as the work is done or on a set date each month. And you want to make sure that everybody knows your agreed payment terms and that they pay within those terms. Depending what they are, I mean, generally it's quite often 30 days, but anything over 30 days, you need to give that some immediate attention. And if it gets to sort of 60 days, you need to be taking some firmer action. So systemize your reminders if you can. If you're using something like Zero or Free Agent, then you are able to send out reminders from the system. Send a friendly reminder 7 days before it's due, just to remind you your invoice is due in 7 days' time. A friendly reminder 7 days after, then a firmer one a few days later, and think about what your process will be in terms of needing to collect that if that debt goes bad and whether or not you need to get some legal help involved. The other thing you can do, some of our clients do it depending on the size of their business and what they do, but you could offer a small discount if you want payment early within 7 days. You might find that actually, for them, a small discount of say 2% for somebody to pay them early is cheaper than what they're having to use to fund their business if somebody's late in terms of the interest they're paying, or if they were to what we call factor their invoices and sell those invoices to a factoring company. So improve your cash flow by looking at potentially offering discounts, and also if they're really bad payers, start asking for people to pay deposits up front, something like that. That's not unheard of either. And one of the best ways you can tighten up your payment terms and your cash flow is if you are in a situation where you're offering services or monthly recurring fees, then you could think about putting them on your customers onto direct debit. That really will lower the stress and keep the cash flow flowing. It boosts your cash, it cuts your admin, and it protects your profit to a certain extent. Yes, there's a charge for collecting by direct debit, but certainly the company we use does our credit control for us. So I don't have to pay for a credit control function. You hope you don't have a credit control problem if you're being paid by direct debit, but you do occasionally get the odd person. But for us, the cost of knowing that our invoices are being sent out on time, that they're being collected by direct debit, if for any reason it's not paid, that the company is then going to go chase that, that's money well spent in terms of the small fee we pay. And the other option to do, the other thing you can do to really tighten this up is also try and reduce the average payment time that you are being paid by your client, and also that you're paying out to your customers. So the smaller the gap you can have between when you receive money and when you spend it out, you'll have more money in your bank, which can be earning interest, which drops through to your bottom line. So manage your ins and outs of your cash flow, and it will actually help you increase your profits. Okay, probably one of my favorite ones, and one that went down really well at our Profit Accelerator Day, is this idea of upselling and cross-selling. It's really simple. On the screen, on the left-hand side, you can see just a grid. It's an example. It's based on an accounting practice, but you can see a list of clients down the side, and you can see all the services that are offered across the top. Where the boxes are grayed out, that's the services that we're currently offering to those particular clients. So you can instantly see that the white gaps are sales opportunities. They are untapped income. Because if some of the customers are buying those services, could we sell those services to the others? So this is a really simple exercise you can do to try and see where you've got gaps and where perhaps rather than going looking for new clients, you can try and increase the transaction value with your existing clients. Now, the reason you want to do that is because obviously you've got no acquisition costs for going to get that customer. So your marketing expenses are less, your sales expenses are going to be less. You've got less time onboarding, so you've got no onboarding costs because you already have that client in your world. You're already working with them. You're literally just adding to what you're delivering for them. So hopefully there's no initial, troubleshooting to be done when you're offering new services because you already know them. You've already got an established relationship. And because you've got that established relationship and there is trust amongst you, your conversion rate when you try and sell these other services to the business will be higher. The cycle between offering it to them and then signing up will be shorter. So I would really recommend that you look at if there are any gaps. You can use this to sort of decide, could you produce a bundle? If you've got half of your client base that are taking two or three of your products, then that's obviously something that a lot of people want to do. So is there a bundle there? Can you package it as a different service? Can you add value? It's a really easy and quick way of seeing where those gaps might be and what else you can do within your existing client base. Right, I am going to stop sharing now. And if anybody's got any questions, then let me know. Because that's the end of the formal part of the presentation. Any questions?
No questions from me, Helen. That was really useful, though. Really good. Thank you.
Thank you.
And that definitely some really good takeaways there, especially the one that's really annoyed me. Business interest account. I've never done it, and I don't know why. I've just had money sitting in my standard account, not earning any interest. So straight after this call, there's an
So
action for me to go and do that.
I had a lady on the Profit Accelerator last week who showed me her bank account. And it's like, why? Why? We were talking five figures. Why is it sat there not earning any interest? And I just that people are unaware that you can have deposit accounts for businesses sometimes.
That was probably my biggest takeaway as well, is having that kind of deposit account and building
Yeah.
the interest when it's just sat there. So yeah, really
Yeah.
good. Thank you.
The other piece of advice is just bear in mind that there is that 85,000 limit with one banking institution. So if you are in the lucky position that you have got excess funds, you probably don't want to put it all in one bank, if you are at that sort of point of 85,000, because God forbid that bank goes bust. Obviously, the protection is only on the 85,000. So if you're in the lucky position that you've got more than 85,000, spread your risk, but by all means, go earn your interest. Okay. Nothing else?
Thank you, Helen.